Hello again. I just thought this week, with the huge volatility we're seeing in the S&P 500, it's just a great tool to explain how I view markets and show you where the sort of key levels are as the volatility picks up, and sort of explain why the volatility is picking up over this last little period. So to start with, let's have a quick look at the S&P over the long term and get a bit of a sense of what's going on. This is the monthly chart of the S&P 500, and I've already spent a bit of time talking to you about the buy and sell pivots, how important it is to understand what the most recent buy or sell pivot was. And also I have explained sort of the development of ranges of distributions of price, and where the support and resistance zones are within waves as well as within ranges. So once you combine all of that knowledge, it really does start to make sense of what's going on, and you can start to map out where the sort of support and resistance zones are above and below the market, and create some targets for yourself, and sort of just understand what's going on, why we are bouncing around between these different zones. So looking at the S&P here, this big long-term chart, you can pick up, I've got most of the buy and sell pivots picked out with these diamonds, with the sell pivots, the black diamonds, and the green, the buy pivots. And you can see, I mean, there is nothing in the market that is 100% accurate, I assure you of that. But just looking at this, 20 years of data, and picking up when we've had the crash in prices in 2000 and 08-09, and also even the European debt crisis, the selling that occurred from 2015 through 2016, you can see prior to those moves, they all had to have a sell pivot. Now, of course, there's times when it doesn't work, and that's going to happen. But when you have these periods when you have a sell pivot which doesn't carry on, you can see that we end up having a buy pivot straight away. So if you don't understand what the buy and sell pivots are, you should go and check out my past videos and scrub up on it, because I don't have too much time to keep going into things every time. And it's just interesting to note now, if we just look at this last period, you can see that the monthly sell pivots have been occurring, and the fact that we've had a false break of that high from January in October, I think, and we've also had a monthly sell pivot. So that is where we've got the monthly close below the low of the highest candle. And then we've had an attempted rally, which is very important, because that is what provides you opportunity. And now we've sold off back to the low of that candle. So we are at an explosive sort of period, and from here, if we do break below those January lows, that really is a line in the sand for the market, where it is just giving you a sense that the uptrend over the last few years is under pressure. Because if we just look at how this market has moved, you can see that all of these waves higher, you've never really had the break below the sort of highest low within the uptrend, and it's continued to head up. Now, the most recent low within this uptrend is that low from January. So if prices do break below there, even though it doesn't say that the market's going to sell off straight away, it is saying that now that uptrend is under threat. Now, once that's happened, usually you will get some sort of false break of that low. Buyers will return, There'll be a lot of stop losses in that zone below that low, so you could expect, you know, there to be quite a period of sharp selling once it does break below those January lows. But often there'll be a balancing up period after that, and if things really are going pear-shaped, well, that's when the market will turn down for its next wave down, and that would then go to the buy zone of this whole wave up. And once we do that, well, that could be it, and the market could take off again. So this process of turning down, of, you know, potentially doing something like this, it takes time. And what you'll see is that the market does have these periods of balancing up back to those longer term moving averages. So every time it sort of breaks those lows, you know, you get this balancing up period, then you have another one, breaks that low, stops everyone out, but then you get another rally, balancing up period, and then again breaks the low, stops everyone out, gets people bearish, and then that was it. And even in the crash in '08, I mean, that was one big wave down, but you can see in the early stages you have that busting below the previous wave low. And again, if we just look at that little uptrend, you can see every wave goes higher. You know, always, it never actually breaks below the previous wave low, but then in this instance it does, and that was the first hint that it was over. But then we did get a balancing up period back to those moving averages after that, and that's where you get your opportunity. And then we saw the crash. So looking at it from that point of view, we haven't even had the break below the previous wave low yet. So it's still very early days. And the fact is, if the market finds support in this area, if this selling is nearly exhausted now, there's no reason why it can't then pick up, take out that high, and then this uptrend will be still completely intact. So it's a very interesting point where we are right now, and it's a great example to use to explain how all of these forces take shape. Now, to give you a more detailed analysis of targets to look for and how things can look after this big selling that we saw on Friday in the US, we have a lot of dominoes set up below here. And if we just look at the last sort of wave higher in this whole rally, which is from early 2016, I've got the key levels in here. So the sell zone of that whole wave higher over the last couple of years is this, 2650 to 2800 zone. The midpoint of that whole wave is down at 2375, and then the buy zone of that is down around that sort of 1950 to 2100. And all of those areas will become very important in this next period over the next sort of year or so, as long as this high isn't taken out. Once the market takes out that high again, even if it does have a little false breakdown here, if the market then recovers and takes out that high, the uptrend is so strong that we can just see a continuation. So as long as this high remains in place above 2900, this can be the beginning of a longer term move back towards this buy zone area in the S&P. And how that takes shape, well, that all depends on all of these key zones that I was talking about last week, where we have this big reaction in prices. All of this price action that occurs after is actually related to that pullback. And I showed you last week, we've got the buy and sell zones of that area here, the green and the red there, and you can see over and over again prices reacting from that sell zone there, going back to the midpoint, which is the point of control. That's where most of the trading takes place. You can see here again and again prices bouncing around from that sell zone area here as well, over and over and over again, going and testing the extremities of that range and then moving straight back to the point of control. So looking at it from that point of view, we haven't actually busted below those January lows yet, so we're still within that distribution, and prices currently are within the buy zone of that range. So if that selling is nearly done, we won't bust below that January low, which is so important. There is a lot of support in this area, and even if we do have another night or two of selling down into this zone, as long as we don't break that January low, prices can still whip back to that 2700 area, which is the point of control. And that is still very much on the cards, even though the market looks so incredibly weak. But the dominoes that are set up below here are quite clear, and there are a lot of stop loss orders in this area, just below the January lows. And all it will take is one or two nights, and if we bust that January low, then you could expect to see very sharp selling come out, and I would give targets to that midpoint of the whole range from 2016, so that's 2375, and also in relation to this whole range here, the area where the market often reverses is sort of 25% below to the 618, which is a Fibonacci level below that range. So a bust of those January lows, and you could expect to see very sharp selling as all of these stop losses in this area go off, and a move down into that area would see big support being the midpoint of the whole rally from 2016, and that could provide some great opportunities for a reaction back to even this 2700 zone, and that could be the fantastic opportunity if you're a bear for a continuation down. Because if we just look at this current down move, if it were to break that low and have a really big sell-off, a big rally back to the point of control would still be below these wave highs within the downtrend. There would be a lot of resistance in that area, and that is when it could be the time to get short for a huge move to the downside. And all of this can take months to play out as short-term traders are whipped out of their positions, because often people get short when it's looking terrible, and then it'll rally, take them out of their position, get people bullish, and then fail again. So this dynamics of how the market moves around, it really is just bouncing around between the larger forces above and below the market, and the job of a trader is to sort of map out those forces and try to get in tune with them and go with them when they can. So looking at where market is right now, it's a very tricky situation now that we have had such a terrible sell-off on Friday back towards these lows. So there are a lot of dominoes set up below here. If we do see continued selling, watch out. The market really can have a sharp move, which would be nearly 200 points lower, and that could come pretty quickly. But if this level can hold, just this little area around 25, the low 2500s to 2600, and that selling gets exhausted, you'd be surprised how quickly this market could rally back to 2700. But that is when you're going to be wanting to look for opportunities to get short, because this market is still looking weak, and as long as it remains below 2950, you've got to be looking for opportunities to get short. So that's it for today. Covered quite a lot of ground after the last couple of weeks. Hopefully not too confusing, but I'll continue to release these every Monday and take you through things as they happen. And so hopefully over time it will all start to make a bit of sense. All right, cheers.